Hey guys, this is Simon. Wanted to do a trade review tonight, basically of the open drive higher that we experienced today in the trend day up. Open drives higher can be really tricky for traders for a couple of reasons. First of all, if you're a trader of the S&P or the ES, what you're used to is kind of a revision to the mean or a consistent pattern where either what most of us are looking for as traders is either some type of pullback where you're getting some type of divergence or a pullback into support for a continuation in the direction that the market's already moving, or you're looking to fade for a rollback and capture the short, right? And this was particularly interesting because for the last couple of weeks, right, the market has been really giving this two-way price action. Shorts have been working really lovely, and getting pullbacks for longs have been working really nicely. And then all of a sudden they disappear, right? And it can be just, to me, it can be shocking how quickly it changes. It's literally overnight. I've been trading for 20 years and it's still it feels like I've learned new every time, like, hey, this is how quickly it can change, even when I'm looking for a move to the upside, right? So importantly, let's just break down the anatomy so you can identify it quickly and hopefully either use that to turn it into being able to make money easily, but certainly protecting your P&L. Before we get started here, wanted to pop up this quick message. If you'd like to pause and read this in detail, you're more than welcome to. Let me minimize this, maximize this. Basically, this says past performance is not indicative of future results and that this is for educational purposes only. What I'm doing is sharing aspects of my trade plan in hopes it'll help make you a better trader. And my focus is to stay on helping traders improve both from an educational standpoint and a performance standpoint, right? So let's get to it. What you'll see here when we opened up, well, that jumped away, but what you'll see, if I can pull this back up on the screen, there we go, is that when the market opened, right, we gapped, and the first thing that you'll notice, both markets had significant gaps, right? So three key items. Both markets gap. Hopefully you can see my pointer, right? My pointer, excuse me. And this is gapping from approximately 24.28 up to 24.34. It's a 6-point gap, which is pretty good in this current environment, right? And Q was a significant gap. It was over 30 points, right? So the first thing you have to keep in mind, the first question you're asking is, do we get gap fill? Do we get half gap? And do we trade below the low of the first 5-minute bar, right? And then the next question you're going to ask is, how strong is tick? I look for the NYSE tick, which demonstrates participation from both the broader market against the S&P 500 to be above 800 for an open drive higher. So right out of the gate, we have the elements. We have a gap, we have a positive 1,000 tick, we have both markets in alignment, right? So let's progress just a little bit here, and what you'll see is that first bar, here's that first bar. Right now, the first thing you're going to notice, by the second bar, we're trading above Globex high in both markets, right? So we've already met several requirements in the first 10 minutes. We haven't traded below the first 5-minute low, right? We have not made any attempt to fill half gap or gap fill, and we now are about to have two green bars and both markets are in alignment. And then the other key that's really important, notice that the NYC tick is coming in while price is moving up. What that says is that the broader market is getting sold initially. People are taking profits, but not within the indexes. They're actually pumping money into the indexes and pushing up. And what will happen is usually there'll be a resolution to that. The normal resolution to that is that the buyers come back into the broader market, and both the S&P 500, the NASDAQ, and the broader market advance, which is exactly what we had today, which is why I'm doing this video, because it's pretty much perfect. So I want to bring you to the next video, the next bar. So I'm going to cover this in just a second here, and you'll see by that third bar, there's absolutely no retrace. Now, here's where the conflict comes in, and I don't have ability to make this bigger, but what you're going to see is, see how tick is still coming in, and there's absolutely no decline in either the S&P or the NASDAQ 100, right? So here's where traders get into trouble, right? So the 24.40.72 to 24.42.75 was a high odds inflection zone, right? And I expected to find responsive sellers at that point, right? So now I'm battling against initiative buyers, which is what we have here, against responsive sellers. Now, For me, this is a challenge. I'm a contra trader and I trust my zones. They pay me very, very well. They have a high win rate in excess of 70% the majority of the time. And so now I'm having to come to a conclusion, and I came to the wrong conclusion. My trade plan says that I pretty much trade my support resistance zones as they are, almost particularly the yellow and the whites, not the greens, but the yellows and whites without regard to market conditions the majority of the time. So what I was hoping for is that we would tag in and get quick rejection. What you're going to see here is we've already spent top of this 5-minute bar, then 10 minutes at the yellow bar, right? And you're going to see the other issue that we're having is the nearest resistance is 58.59 on NQ. So let's go through the list one more time and slow it down. We have a gap. We're trading above the prior day's high in both ES and NQ. Both are above Globex high, and both are above their opening print, and neither one has made an attempt to fill the gap, right? So I want to advance it just a little bit more. And now notice we're pushing down even further in tick and advancing in price still, both on NQ and ES. So I got to tell you, this is 5, 10, 15 minutes, and I actually gave this short. So here's where if I could have done this over and done it perfectly, is what I would have. This is what I would have done. I would have covered my short, which was the appropriate thing to do. We did that. I would have flipped and gone long if I could have had a chance to do it over again. I didn't do that, and obviously hindsight is 50-50, but hindsight is 100% actually. But the point behind this is the one way that this helped modify my behavior is once I identified the open drive and that we didn't get any rejection out of the yellow zone, which was a high odds location. It was over 10 points up over the past 2 weeks. Any setup like that would have paid me really good money, and it would have paid it to me relatively soon, right? So watch as, there we go, and I get a little bit closer. So when we're in here, right, and we start to get rejection down, and we finally start to push lower. So look at this. This is 5, 10, 15, 20, 25 minutes in. I'm getting a little concerned at this point. NQ hasn't been able to close below a prior 5-minute low, right? And remember, this is a changing character. NQ has been the weakest of the two markets over the last week, right? It's been pushed down every single morning. If you'll go back and look, you'll see there's been a rotation down every single morning. This is a changing character. So as we push and we finally get right here, right in front of this bar, on the close of this bar right here, I finally cry uncle. My short entry was 24.40.50, and I believe the worst anyone covered in the room was -2 ticks. Most people covered flat. I don't think anyone made a profit on it. And that's good, right? That's exactly what's supposed to happen. We came all the way down to a 0 tick. We haven't gotten any pushback at all. We haven't been able to get back underneath Globex high. It's time to surrender the trade, right? This is perfect open drive higher. And I want to pause for a second here because this is something that I understand strongly. The desire here is to envision it rolling down and coming back in. The fact that the tick is coming down and not moving below 0, and the fact that there's no price give up as tick comes in, is your sign that this trade is not going to work, right? Additionally, what I find with a lot of traders have difficulties, they start fantasizing that this is going to push in or that it, quote, has to come in. It doesn't have to come in, right? The hardest decision any trader can make, including myself, is to surrender the trade. And I surrendered that trade. This is a high odds trade for me. I surrendered it. I want to show you as it advanced through. Okay, it's obviously pushing. Again, at this point, the yellow zone has done its job. 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55 minutes. Almost an hour containing the push up in the market. You see ticks gone negative. Price is still pushing on NQ. Price is still pushing on ES. And the target is still above on NQ. So you're going to see it advance just a little bit more. And then finally, you'll see tick is improving here to the upside. We finally make an upside bust. And then I'm just going to advance this. You'll see that you can see now that we clearly have an upside channel. At this point, there's no point in even considering a short unless that breaks, and we get below the yellow zone at this point. This is really valuable, guys. I can't stress identifying the gap, the open drive higher, the lack to be underneath the first 5-minute low. This is gold, and the reason why it's gold is because you know not to fight it, right? Now, I do not consider taking a long 12 points up on the day to be a brilliant move. That's me. I have a very specific goal. I want to get long where I have a good chance of taking money from others, and there's a very low odds of them taking money from me. That is my complete objective every single day. I cannot do that buying a product that normally goes zigzags back and forth, buying at the high. It worked today. It does not work most days, but I also knew not to short it. And I completely surrendered, by the way. When I covered this, there were no more trades for the day. And I want to show you why that was important. Look how this market pushed through all the way through the end of the day. And I left for lunch. The screen stopped updating, but you're going to see that it finally pushed, and I'll have it up. There you go. See, we pushed in the green zone. Now the green zone is not a high odds location. I expect a pause there, but not rejection. You can see the green zone did not create any rejection, and thank goodness I chose to lay my arms down, because I want to show you something. This is where I chose to lay my arms down, right? Approximately in this area right in here is where I covered the trade. Notice that this would have been another advance of 12 points, right? 12 points of fighting, 12 points of trying to get the market lower, consistent stops, and it was not smooth, right? It was smooth if you were just along and swing it and don't cover it kind of guy, but this was not smooth. Trying to make this work. I understand that, you know, we rotated from 48 to 46, but this is not an ideal market, right? You just want to be out of the way at this point and let the market finish doing what it's doing. Again, the green zone on NQ, good for a target. You can see the front of the zone held for about 20 minutes, but we expect green zones to give, just simply provide pause, and that's exactly what they did, right? And then you can finally see where we closed out the day here. I'm going to advance it. They finally found some sellers here at the end of the day, but when I say they finally found sellers, let's be realistic. They rolled it from 53 to 50 after having the market up 25 points. So that is the anatomy of a trend day up, open drive higher. I'm going to show it one more time so you can see it and quickly. Let me move it back over here. So here's where we start. You can see the support resistance. There's the first 5-minute bar. There's a second 5-minute bar right into resistance. It pauses for almost an hour inside of resistance, but no counter rotation back down. Lack of any attempt to get below the first 5-minute low. When you see this, when this is the start of your day, right? I'm not a chaser. I don't chase markets up, but certainly if you have a key location, you can test your short, but I would not fight it very hard at all. It's unfortunate that we gapped and ran as hard as we did, because by the time you got your first long entry at zero tick, we were already up 15 points on the day. Not much you can do about that. This is just, I would just sear this into your brain. This is pretty much picture perfect. Over 800 tick, no print underneath the 5 minutes in either market, and both markets are in sync. And again, if we just move it quickly, there's the eventual drive right to the back of the zone, and we never, ever found any sellers. So at any rate, my name is Simon. My job is to help traders move from being break-even or losing traders to consistent traders building consistent P&L. And part of that, doing that, is avoiding shorting days like today. And if you can get long, God bless you. That's wonderful. But certainly don't bury your account on a day like today. It's not worth it. PA will be back to normal probably starting tomorrow, and there'll be plenty of money to make. Anyone would like to come visit us in the room, send me an email, tradingperform@gmail.com. 5-day free pass into the room, and we'd love to have you come see how we teach traders to be real traders and not some of the craziness that you see on Twitter and StockTwits. Anyways, have a great night, guys. Talk to y'all soon.